Good afternoon, everyone, and thank you very much for joining us today. My name is Alina Islam, and I'm a mining analyst here at Red Cloud Securities. I'm very pleased to introduce Gunnison Copper to you today. They are currently producing copper from the Johnson Camp mine, which is under JV with Rio Tinto, and have a portfolio of copper projects in Arizona. To give you an overview of the company, as well as discuss upcoming plans, we have with us Stephen Tyberaud, CEO and President, Craig Hallworth, SVP and CFO, and Robert Winton, SVP of Operations. Once the presentation is over, we will conclude with a Q&A session, so please put your questions into the chat box, and we will get through as many as we can at the end. Before I get started, I do need to mention the fine print. For Gunnison Copper, there may be some forward-looking statements made on this webinar. Please read the cautionary note on page 2 of the Gunnison Copper corporate presentation located on the company's website. For Red Cloud Securities, I would highlight that this webinar is for information purposes only and should not be considered a solicitation to sell or purchase securities or a recommendation to buy or sell securities. We note that this webinar does not take into account the particular situation or needs of individual investors. Participants should rely on their own investigations and seek their own professional advice before investment. Please see our most recent research located on our website for Gunnison Copper's specific disclosures. And with that, I'll hand it over to you, Stephen. Please take it away.
Thank you very much. And thanks, everybody, for joining us today. We're going to discuss Gunnison Copper. And it's a great picture on the screen you see right now. That's our Johnson Camp mine, and was just mentioned, this is in production now. So you can see we've got copper cathode on the deck. Some of that's just gone off for sale. We're going to be selling more of that in the coming weeks. And obviously, as we ramp up production, we hope to achieve our 25 million pound per annum mark sometime next year. In the background, there's equipment working in the pit, and of course we have Anna, one of our environmental specialists, in the camera shot there. So, look, if you've been following us over the last 6 to 12 months, we've been talking a lot about, getting this project into production, and we've done a fantastic job. Robert's going to take you through that. Craig's going to take you through some of the other exciting news that we've sort of been putting out there recently, particularly on our big flagship operation, which is the Gunnison Copper Project. So that's a big pit that's in development. And that's really the exciting one as we move that forward into sort of the PFS study next year. So I'm going to keep moving forward. We have the usual disclaimers. Look, I think I already made a number of forward-looking statements. These disclosures about forward-looking statements, if you want to read them more fully, have a look on our website. There's a lot of really good information on the website, so I encourage you to go there, follow up after this presentation. If you're interested, look at the technical reports. There's some great videos on there and some really good images on what we're doing. So what are we about? Well, we're a pure copper play in Southeast Arizona. Many of you probably know, but Arizona is a tier 1 mining jurisdiction. It's one of the premier copper provinces in the world, in fact. And that's why you've got, a lot of the big guys there, BHP, Rio, Freeport, all in the state, all producing. So we're down in the southeast portion of the state, and we're operating the Johnson Camp mine. And that's our ability to kind of build these mines and bring them into production differentiates us from a lot of junior companies out there. There's a lot of junior companies that talk about getting into production. We've done that over the last 12 months. Right beside Johnson Camp, it's about 1 kilometer away, is our flagship Gunnison Project. That's a big development project, massive upside on that. We're going to go through that in more detail in the presentation. And we haven't really talked a lot about exploration. we own the whole sort of Cochise mining district. There's something like 10 or 11 historic deposits on that, and we have a number of resources. So over time, we're going to continue to develop that whole province out, if you like, and we control all of it. So it's all exciting. You've got these great assets. You know, why now? Well, it's all about made in America copper. You know, you would have seen a lot of the news that's out there, you know, regarding critical minerals. There's a deficit in the US of copper metal. Our projects helping to fill that deficit, and our pipeline of projects is going to continue to do that. So there's a lot of attention in the copper space, particularly in the US. We're proud to be part of that. In addition to that, we have major backers. So the Johnson Camp mine, that's a partnership with Rio Tinto. It's not really Rio Tinto. It's called Nuton, and we're developing with them this sulfide leaching technology. Nuton is a venture partner, a subsidiary of Rio Tinto. Then we also have partnership with US Department of Energy. Craig's going to talk a little bit more about that. Ultimately, as an investor and you're looking at our stock, I encourage you to have a look at our peers in the state and elsewhere. We're undervalued compared to our peers. There's some reasons for that. We can maybe get into that in Q&A. We're closing that gap, and we intend to continue to close that gap over the next 6 to 12 months because we've got a lot of catalysts coming on the rest of this year and going into 2026. So that's kind of like a brief intro to the company. I'm going to hand over to Craig. He's going to talk to you about sort of some of the exciting news that's coming in front of us.
Thank you so much, Stephen, and hello to everyone on the call. Thank you for listening. We're going to take a look now a little closer at the assets. You can see the Johnson Camp there. A lot of people may have seen this picture before, but that's our SXEW refinery, and you can see the big pit there on the left, and just over the hill there, that's where the Gunnison Project will be. So everything is all together in a very close proximity, and that's one of the strengths of our ownership of this Cochise mining district, as we like to call it, because we've got synergies. We've got a big project, and we got an operating mine now, Johnson Camp, and you can see them here in this picture. Take a look at the left. That is the Gunnison flagship deposit. In that picture, it's to scale. You see the Gunnison Project, you see the Johnson Camp, the operating mine in the middle, and then you see something on the right, Strong and Harris. That's our most advanced satellite deposit, and they're all right there, very close to each other. We can share infrastructure. We've got the I-10, that highway, right beside the site. We've got the Union Pacific, that rail line right beside the site. The Gunnison Copper Project is going to have a rail spur, so it'll be rail connected right to the plant. That's something a lot of other projects don't have, and that's going to give us a real boost on that freight cost for supplies in and our product out. Let's look at the left there, the Gunnison Project. Let's talk a little more about that. This thing has scale. This is 550 million tons in the PEA mine plan in that open pit shell. It's got a 0.35% total copper grade. And that grade actually compares very favorably with a lot of the other big open pit mines in production today. The Freeport McMoran CEO said recently, talking about the United States, that, they're mining under 0.3%. Their pits in the US are under 0.3%, some of them. And the same thing goes with other producers nearby, such as Asarco. They've got pits at 0.3% or lower. So I think in comparison to those big open pits that are operating at a profit today under these larger companies, a 0.35% total copper is actually a pretty good grade for the United States. Now, on top of that deposit, we've got our overburden. That's something we'll have to strip. There'll be costs to do that. But that overburden is comprised almost entirely of gravel. And the gravel is a lot cheaper to mine. It's very soft material. A lot of it doesn't even require drilling and blasting. So we're going to save about 50 cents a ton mining that material. And as we'll talk to later on, we believe that material has a sales value. An aggregate material, it's a non-traditional byproduct. We also have a lot of limestone that's there as we get down to the ore body. And we believe the limestone is a very high quality limestone that we'll be able to make a significant profit on selling that limestone into the market. And we'll talk a little bit more about that later in this call. The last thing I want to touch on with the Gunnison Project is our permitting strength. So we've actually permitted the Gunnison Project previously under what was called in situ leaching. So we actually, if you look back at our stock chart the last 5 years, we were a 200+ million market cap company. That's when we were building what was called a test well field using the in situ leaching technology, and we had that fully permitted. We went into production, and there was some technical challenges with this technology that led us to shut down the mine and put it on care and maintenance in 2022. And what I say to investors is that's what's provided the great opportunity today, because if you look at the stock chart, you see that as we put the mine on care and maintenance, the stock price declined significantly. It wasn't until very recently, in the latter of Q4 2024, that we were able to get the land we needed and pivot this thing to an open pit. So it's now a traditional open pit approach. We put out a PEA back in December of 2024, and we've been telling everyone about it ever since. But, as recently as this morning, I received a message from someone asking about the company and still calling us in situ leaching project, which really is quite crazy because it's been about 8 or 9 months now. But it just goes to show that we still need to get the word out. And that's what we're beating the drum. We're doing a lot of marketing. We're going around the country, the United States, around Canada. We're on the media. We're really flooding the zone here with information to investors about this project and all the great economics that we're going to tell you about later. Let's just move on quickly now to the Johnson Camp mine in the center. Stephen touched on this. This is the partnership with Nuton LLC. They fully funded it, and we're going to see in our Q3 financial statements what that project cost. It's over $100 million that we had spent to date at Q2, and it's something that we're going to receive, payback as the mine gets into free cash flow. We started production last month. We're having our first sale was actually on Friday of last week. We sold our first copper, so that was in September. And now as we ramp up the mine, we expect to get up to that sort of full production that we expect in the first half of 2026. And I expect that to also yield some free cash flow and profits per unit as we get into that higher capacity. So as we get into those profits, we're going to use those profits to pay back the financing, essentially, the 0% financing that Nuton gave us to bring this into production. And so as we pay that back, we're going to get through what's called this stage 2 demonstration agreement. And once we get to the end of that, which is the end of 2029 for all purposes here, that's the point at which, if we haven't paid them back, the account is going to zero out, and we'll be free and clear on that mine to produce going forward after that. And finally, on this slide, at the far right, the Strong and Harris satellite deposit. We've got about 10 satellite deposits that we know about today. Strong and Harris is the most advanced. You can see we think there's 76 million tons at 0.52% total copper. This is a great grade. It's higher than the Gunnison pit, the main reserve, resource grade. And so that's something that we think we could potentially sequence into the mine plan. And we're going to be wrapping this all up in the next few months. We expect by early Q1 2026, we're going to have an updated 43-101 report on Gunnison that's going to incorporate all of the opportunities we've been working on, what's called the high value add work program. We're going to talk to you more about that on the call. But you can look forward to our press releases as we move this new study into publishing by the early Q1 2026. Now on this slide here, a little bit about our district, right? This is what we call the Cochise Mining District. You can see all of the deposits here. There's a lot of known deposits, and they're essentially skarns, which essentially bubble out of giant porphyries. We know the biggest mines in the world, the biggest copper mines, they're all on porphyry systems. And we believe that there's a porphyry system here. Some of our drill core that we've got from the Gunnison Project, we've seen evidence of porphyry. So we think there's a porphyry there. It's just a question of exactly where and how deep. And we're going to be doing exploration to find this porphyry. We're talking with Rio Tinto. They have some interest in doing this with us. There's been talk of an exploration partnership agreement, and I'm hopeful that we'll be able to come to the market with a signed agreement by the end of this year. Finally, if you've listened to our presentations before, you may have seen this slide before. It's really the main point I want to drive home here on why you should invest today. It's because of the valuation gap. Take a look at some of our closest peers in the region, Arizona Sonoran, Faraday Copper, and a lesser known company, New World Resources. but they're trading over a 0.4 price to NAV today based on numbers calculated by CIBC. We're trading at a 0.1, and we're at a similar stage. We have a PEA, they have a PEA. We have an open pit, they have open pit. We have similar scale, they have similar scale. So the comparisons are there. You can compare us with pluses and minuses to these peers. We believe for where we're at today, we should be trading in line with those peers. But you see a significant valuation gap. And that's what we're working to close. As we advance this project, as we advance these opportunities, the high value add work program that we're going to roll into a new 43-101 technical report and release in early Q1 2026, you're going to see a remarkable improvement. And I believe that is going to help us to close this valuation gap and provide a great return to investors who are either holding the stock, adding to their position today, or investing for the first time today. Ultimately, you can see on the far right there, New World Resources post-deal. They were recently acquired by Kinterra. There was a bidding war. Central Asia Metals Limited and Kinterra both bidding for that company. It's a small project in northern Arizona. It's about a quarter of the size of the Gunnison Project. It's unpermitted. And take a look at the valuation they got on a pre-money basis, a 0.97 price to NAV. If we were able to advance our project and to transact in that style of transaction, you could see something like a 9 or a 10 times return on where we're at today. Over to Rob.
Thank you, Craig. So the Johnson Camp mine has certainly flooded the news recently, as we've had some significant milestones and really been able to share that with the market, as we are, as you see in that picture to the left there, we are now producing grade 1 copper out of the Johnson Camp mine. So the partnership with Nuton broke ground in July of last year. So July of 2024, we put equipment out on the what was to be our new leach pad. And that has been 1 year of some significant efforts by the entire team here, all of our contractors and partners that have been really working hard to achieve this milestone. So as Stephen and Craig both mentioned, we started up the plant in August. That allowed us to get SX operating. The EW circuit started to produce copper. And we did our first harvest at the end. August 25th, we got about 225,000 pounds of copper, about 100 metric tons. And that sale began, as Craig mentioned, on Friday, and we'll finish that up in the next couple of days. And we're actually, as we sit here today, we are now on our second harvest. So we're producing that next 100 metric tons of copper. So again, also mentioned 25 million pound per year. That's the nameplate capacity. So we are currently only running the run of mine side, so the oxide ore. The Nuton process begins commissioning this week. So we will start the crushing, stacking, and agglomeration processes in order to start the Nuton leach and really start to ramp them up as we start the sulfide leaching later this year. And again, first Nuton production will be by the end of 2025. And again, that ramp up will take us likely into Q1, early Q2. We should be able to start achieving that 25 million pound per year, about 2.1 million pounds of copper per month. And again, first harvest was grade 1 copper, so 5/9 pure copper. Very exciting times here. Next. And I think we should maybe start with this slide, but a significant event is we've done this entire construction. We've had hundreds of people on site. We've had to onboard them. We've gone now over 11 years, nearing 12 years with no lost time accident at the Johnson Camp mine site, which is a tremendous achievement. The entire workforce, all of our contractors have really taken the safety to heart. And that's critical, as we want to ensure that everyone that visits our site is leaving this site with a smile on their face and doing better than when they showed up. So those are critical milestones and critical achievements for the entire team here. And again, this is a significant boost to our communities. I've recently spent some time with the mayor of Wilcox, which is a community about 20 miles from us. They are very excited about what the Johnson Camp mine, the Gunnison Project bring to the local community. And they're really looking to set up a hub where we can start to house some of these contracting groups and really be a place of desire for those that are looking to get into the copper space and certainly joining the Gunnison Copper organization. And final point there, we've really done some good work with the communities with respect to the community colleges. We'll be looking to bring on apprenticeships programs here, which have not been something that we've done at Gunnison prior. So again, exciting times and exciting opportunities as we look to expand the Johnson Camp mine and ultimately transition into the goal of the Gunnison Copper Project. So some of those key metrics. So again, as we transition, so Johnson Camp mine in production, producing grade 1 copper, that really gets us excited about what the Gunnison opportunity brings to us. So again, about 2 kilometers south, just across the interstate, we find that Gunnison project, and an NPV of $1.26 billion, sorry, as I took the percentage out there, an internal rate of return nearing 21%. And really, I think one of the more important metrics is that less than $2 pound operating cost. Because again, at $4 copper, this is producing $350 million per year in production. On an 18-year mine life, these are some significant metrics with respect to the project. And Stephen and Craig, as we expand on this, will really share some insight onto what our high value add program is really looking to deliver. Is we're looking to lower the capital cost, the initial capital cost of this project, while improving the operating costs, which again, both of those being achieved through the high value add program will deliver some significant economic improvements to the overall project at Johnson Camp. And I think standing to that, Stephen has spent some significant time recently in this project, so I'm going to hand it back to Stephen to dive into our the key value add work program, the mineralized sorting.
Thanks, Rob. So we, you might have seen some news we put out this morning about mineral sorting. Really excited about this opportunity. You can see on the left there, that's a photograph of some of our drill core. It's called the Martin Formation. This rock type makes up about 45% of our in-pit resource, but it's unfortunately a fairly high acid consumer. Now, that acid consumption's baked into the current PEA. What that does is we mine everything you see in that photograph and we put it on a leach pad. But the only thing that's producing copper is the greeny colored material and the red material that's inside those green boxes on the core photo slide. So that stuff is quite high grade. Like typically that's sort of going, 1% or so, but it's being diluted by all this internal waste, which is the sort of browny, creamy colored rock that you can see on that photograph. So we did some initial testing on this last year. This test that we've just completed in August was really about taking a very large sample of this. We drilled 3 holes. We took like a half-ton sample of bits of core, just like this, and we ran it through a machine. It's called an optical mineral sorter. All it does is look at color variation. And you can see when you look at that photograph, you can pick the ore from the waste or the mineralization from the waste fairly easily. So it's just a matter of training a machine to do that. So it was a very successful test. We were able to extract from that pile of rock that we tested about 99% of the copper. So we lost a little tiny bit of copper to the waste pile, but 99% of the copper was pulled out of the 1,000 pounds of material and put into the good bag, which was the mineralized pile. What that meant was the rest of it went to waste. So we've got some more work to do on this test, but if you kind of do the back analysis, what it means is that we can pull out once we've mined the material, before it goes onto the leach pad for processing, we can run it through this mineral sorter and we can reject 40 to 50% of the material as waste, so we don't have to spend money putting acid on it for no copper. At the same time, we get almost 100% of the copper. We're not losing anything. It's about, for this particular sample, we generated about a 75% reduction in acid consumption. So that would equate to about a 75% reduction in cost of processing this material. I think in our PEA, this material was costing, just for processing, around about $2 a ton. So, we could potentially do this for 50 cents a ton or something like that, should we be able to roll this into the final mine design. So good work. We want to do some more test work on some other rock types. This was the key rock type. We've been focusing on this. We also want to do some more test work using different machines and different size fractions. But very excited about this because we've been saying for a while, we think we can generate a better PEA and ultimately a better project by reducing costs, increasing the head grade, and lowering capital. And that's what we've been focused on. And this demonstrates that we're on the path to do that. So there were two other parts of the high value add program that we've been working on. One of them is the gravel, the alluvium. This is a cross section through the deposit. You can see on that there's this pale yellow material on top of the red mineralized body. That is just gravel. Most of it's free dig. What that means is that, our strip ratio, which is the total strip ratio, is 2:1. But of that 2 of waste, 75% of it or so is just this free dig gravel. We've been putting it aside in our model as waste. We believe some of that has got some residual value or commercial value. So we have a team working on that right now. We hope to get some results out sometime in the next few months on that. It's not just gravel, it's also limestone. There's about 85 million ton of this white looking marble or limestone that comes out as waste. It's not in the ore body, it's in the hanging wall. And we've been just putting it on a waste pile. It's the same sort of white looking marble that you would see on your kitchen counter table, on your countertop. It's good stuff. So we have a team right now. They've taken the samples. The samples are in the lab. We're going to analyze that material, and we believe there's a high commercial value for that. So that's not currently baked into the PEA. If only 50% of that 85 million ton was sold, and we sold that for $20 a ton, that's approximately 850 million in additional revenue without cost. So we're excited to have that as a catalyst coming up sometime in the next couple of months. So I'm going to hand back to Craig. He's going to talk to you about why invest, and then we'll continue the presentation.
Thank you so much, Stephen. We're really in a great time for copper, and also a great time to be in copper in the United States, right? Copper is going into virtually everything that's important today. Take a look at artificial intelligence. Everyone's talking about it. You can't go 2 seconds without hearing someone talk about artificial intelligence. Take a look at President Trump at the White House last week, and all of the leaders of the technology companies pledging $500 billion, $600 billion, $200 billion. Huge investments. OpenAI announced a $500 billion, what they call a Stargate program, all artificial intelligence. And guess what artificial intelligence needs lots of? It needs lots of copper, a lot of copper. There's about 27 tons of copper in every megawatt of applied energy that goes into a data center. And artificial intelligence is completely dependent on new data centers coming to market. Every single data center could use millions of pounds of copper. So we're going to see an enormous increase in demand in the United States. And that's why we're well positioned at Gunnison Copper to be, as the newest producer, to be supplying copper directly into those supply chains. And I think this gives us a halo, what I call a halo as a company here, because we are completely made in America. All of our employees from the start to the finish, from ore processing, the finished product, we sell it in America. It's 100% American. And I think that's really important as the government strengthens the supply chains and, as the whole society comes together, as people join together with this goal of increasing production in the United States. And, the other interesting thing about copper is it's a very sustainable metal. I'd say one of the most sustainable metals out there. Something like 80% of all copper ever mined is still in use today. And that's because it's just so widely used in virtually everything that touches electricity. Now let's talk a little bit about the United States. You know, the government is stimulating all across the country, and we've received stimulus. You know, Stephen mentioned it earlier, the Department of Energy. I think everyone on the call, or most of you listeners, have heard that the Department of Energy selected us as the only copper project in this year, 2025, to receive an allocation of 48C credits. And now that Rob's got the Johnson camp into production, I expect to receive these credits and be able to monetize them in the next several months. And so once we can monetize them, once we can get that cash, turn that into cash, we're going to take that cash and we're going to use that to pay down our debt. And if you've seen our financial statements or if you've listened to our calls, you're aware that we have a $13.75 million debt. And this is something that, as the CFO of Gunnison Copper, I am strongly convicted to eliminate this debt as soon as possible. And so we're very fortunate that the Department of Energy believed in us and selected us, because we're going to use those funds to materially reduce this debt, or hopefully eliminate it. And I'm targeting to do that in this calendar year. Again, I put this slide in the deck twice because I just want to always bring it back to this. This is why I bought the stock about a month or two ago. This is why I bought the stock 5 or 6 times in the last 9 months since we pivoted Gunnison Project to an open pit, because it's very simple in terms of how do these types of projects get valued. You can look at historical, you can look at benchmarks, you can look at analysts, you can read analyst reports, and you can get the sense of what's the price to net asset value. That's the key metric here. That's how people are valuing this type of company. And what should it be trading at based on historical norms and based on peer trading comparatives? And it's all very clear. It's very clear that we should be trading at something like a 0.4 price to net asset value. And that's our target prior to getting to the PFS and permit amendment step. At the PEA level, and with our updated PEA that will be coming out very soon, we are aiming to re-rate this valuation up to that 0.4 price to NAV. That's our target here. And I think what's interesting about the high value program is, you know, as we're press releasing these results, you know, we can't necessarily tell you the economic impact until we get to that stage of a 43-101 technical report. That's why we've added that in. If you've been following us for a while, you know, we weren't planning to do that 6 months ago. But since then, we've come to realize that if we want to tell everyone what's the economic impact, what's the valuation improvement that we expect in the project, we have to put it out there in a 43-101 report with all the rigor and all the review and et cetera that comes along with that level of report. So you can know that you can rely on that once we bring that to market in early Q1 of 2026. So we've got catalysts. You know, we've talked about this before. We've got lots of catalysts coming up. We've got, some of these have already come out. You know, the production, we went into production at Johnson Camp. We've now made our first sale at Johnson Camp. We're coming to market now. We've seen the first press release on our high value add work program. There's a lot more to come. There's a lot more press releases to come on the high value add work program. And those should all be coming to the market over the next 2 months. We're going to be monetizing that 48C credits. We're going to be paying that down, that debt down. And I hope to do that before the end of this calendar year. We're then going to move on to our pre-feasibility study. Let's talk about this for a second. This is the next big step up in the valuation of the Gunnison project. You know, if you look at PEA valuated projects and PFS level valuated projects, the PFS are always valued much higher. And that's because of the additional de-risking that's happened. We're going to move that resource up to a reserve. That's very important for, you know, comfort and reliability on the ore in the ground. And in addition to that, we're going to do in a parallel process permit amendments so that we'll be fully permitted by the end of that pre-feasibility study, which we're currently targeting the end of 2026. And as everyone knows, once you're fully permitted, that's a major, major de-risking step in any project. So to be able to say, hopefully at the end of 2026, that we have now a reserve, we've advanced the engineering on the plant, we've got all the upside from those opportunities from the high value plan incorporated, and now we have it also fully permitted. I think that in the next sort of 18-month timeframe, that's going to be a huge step up in the valuation of this company. possibly on the discount rate that analysts use, but also on our multiple, right? On that price to NAV, we should be, in the 0.4 to 0.6 range there, which would be a even more remarkable re-rate for our stock versus today. I saw one of the comments here as we were talking. Someone was asking about the timeline to the Gunnison project. When are the next big steps? When is this thing going to go into construction? When is it going to go into production? This is our current timeline. So you can see here that at the end of 2026, that's when we're targeting the next major step up. I already spoke about that, but that's a very important horizon for investors today, right? Is to know, when are we going to get there? It's within 18 months. It's not too long from now. It's coming up quickly. After that, as we advance the feasibility study and get this thing into production, into construction, I believe that could happen by 2029. It's a 2-year construction. So that means we're going to be operating by 2031. With a mine life of 18 years, that takes us to 2049. So this thing's got scale, right? I mean, it can produce, we think, up to 8% of the total production in this country. That's a lot. That's a lot for one mine. And I think the scale of this, and I think also the fact that we're not a controversial project, that we are a very sort of loved, I'll say, project in the local communities. It's something that means that government can easily back us. They can get behind us because they know that we're not controversial. They know we do a good job on safety, that we hire locally, we spend locally, we produce made in America. And we're going to have a significant copper project of scale that's going to be coming into construction and production in the next 5 years. So we have a lot going for us in the department of talking to government agencies to potentially receive future stimulus at this company. Now let's just talk a little bit about the capital structure. We're about 100 million Canadian market cap today. We've been doing a lot of marketing. We've seen a huge increase in the volume. Our shares trading has increased probably by 15 or maybe even 20 times now what it was back in before we pivoted in late 2024. We do have some debt on the balance sheet. I already talked about that, and we have a very solid plan to eliminate this debt, hopefully by the end of this calendar year. So we're looking forward to that. Now, in terms of who's owning us, Greenstone Resources, that's our biggest shareholder. They own about 40%. They've been with us for, something like 10 years. They're very, very supportive. And we've seen a lot of institutions, coming on board. Both of the raises we did earlier this year were virtually all institutional investors. We've got, over a dozen different institutions, funds, natural resources funds, so on and so forth, that have bought into us. And I think that reflects a growing sense in the market that, that sophisticated investors have bought into us, and a lot of private wealth managers are advising us to their clients. We've seen a lot of new investors coming on board, and I think that bodes well for us as we move into the future here. I will hand it back to Stephen. Thank you.
Thanks, Craig. You can get this information off our website. I'm not going to dwell on it. The key takeaways really is that, consistent with our US story and our Made in America story, most of the management, or all of the management team, are located here in the US. A couple of our board members are located here in the US. And if you go through the guys, you'll see, there's a good spread of technical and commercial, banking, and political. So we've got the bases covered. The board's very supportive of the management team and the work program, and everybody, the board members have been a delight to work with. So I'm going to sum up, really just cover the catalysts that are coming up in the next 6 months. We've already done the Johnson Camp first production, but there's going to be more catalysts that relate to that, because as we ramp that up, we're going to be bringing on the Nuton circuit and bringing that under leach. And so there's a bunch of really good news flow that's happening around Johnson Camp over the next 6 to 12 months. We should see copper contributing to the production from the Nuton circuit, which is the sulfide leaching circuit, early next year. The high value add program, we've talked about that. We've just released some results. There'll be more results coming out. I think the next round of results are probably going to be related to the limestone. So keep an eye out for that, because I think there's a lot of value to be had in that limestone. We are in discussions with Rio Tinto, the exploration guys. They're interested in the big picture. You know, we've talked about, or Craig showed earlier, there's all this mineralization in this Cochise mining district, and it's all being fed by a porphyry system somewhere. You know, we've not gone looking for that porphyry system. We've done some geophysics. We believe there's some valuable targets out there. So we're in discussions with the Rio Tinto team, and we'd like to see them come in and do some exploration to find that big porphyry. And that would just be more value to our shareholders on that. The Gunnison PFS study and the permit amendments, we're doing the planning work right now for that, the pre-planning work for that. So that's going to kick off. Some of the actual activity on the ground will not start until next year, but for the rest of this year, we'll be doing the planning for that. The Nuton production, I kind of mentioned that. That's significant. It's really significant because, you know, this mine is the first mine in the world to be applying this technology at the commercial scale that we're applying it at. Essentially world leaders. The Nuton team and the Rio Tinto team have just been fantastic. They're a delight to work with. They're super supportive, and we're very happy to be able to moving this technology forward. Craig and the team done a great job on the 48C. We hope to monetize that this year. And then we'd like to do an update of the Gunnison PEA towards the end of this year. It may roll into Q1 next year, but our goal is to try and get it out this year to incorporate those high value add results. The PEA is already good. It's already super competitive in the market. We just think we can make it better and sort of inform our shareholders in the market on the direction we're heading on that. And ultimately, we'd like to bring on some strategic investors into the organization. You know, I think when we ramp up this production and update the PEA, you're going to see some interest there. So, you know, thank you for your time. We're a US producer. I'm very proud of the team, particularly the safety track record, the work that Rob, together with the Nuton and Rio guys, have done on site has been outstanding. We have significant catalysts over the next 6 to 12 and 18 months. So if you've been following us the last 6 to 12 months, everything we said we were going to do, we've done. And we hope to continue that track record and deliver on these catalysts over the next 6 to 12 months. That's it. Thank you for your time. We're happy to take some questions now.
Well, thanks a lot, Stephen, Craig, and Rob. That was a great presentation. And like you said, we can move into the Q&A portion of the webinar. Just as a reminder to everyone on the line, you can type your questions into the chat box at any time. So I think a couple of these questions may have been covered during the presentation, but I'm going to ask them anyway. First off, at the current copper price, how long do you estimate it will take to pay off Nuton?
You know, what I would suggest for investors today looking at this question is related to the terms of our agreement. You know, and it says that at the end of the stage 2 demonstration agreement, which, you know, is technically about mid 2030, but for modeling purposes, we assume the end of 2029, that at that point, whether we pay back the financing or not, the account zeroes out. And that's incredibly important. And that was incredibly important to us when we negotiated this contract, because we wanted to make sure that there was, you know, zero risk to our investors from this Johnson Camp mine. And that's what it is, because they paid 100% of the costs and they're responsible for that. And if we get to the end of the stage 2 and it hasn't been paid back, it zeroes out. So essentially they're bearing all of that financial risk. And if it was to zero out at that time, which it will, then we'll be able to continue to produce at that mine after that, and we won't owe them anything. So I think it's a great deal that we made for our investors, and I think people can, you know, conservatively assume that at that point it will be fully paid back no matter what.
Okay, on that note, Craig, how much free cash do you have on hand, and how long would it last until another raise is required?
We're in a really great position, actually, with our cash balance. The way I would suggest people look at this company is, we've got a big number of cash on the balance sheet. But really, the Johnson Camp, I would consider that its own, sort of cash generating unit. And that's fully funded, like I just said previously, by Rio Tinto Nuton. So we don't have any worries about cash there. On the Gunnison side, right, on the Gunnison Corporate and the Gunnison Project side, we had over $10 million US in cash. So we've got a lot of cash. And that came from 2 successful raises this year. We went back to the market in April of 2025 because we wanted to raise a little bit of money. We ended up raising 5 million Canadian to fund the high value add work program. You've seen some of the results now. We saw great results on reducing the acid consumption in the most acid consuming ore type. So it's great results so far, and a lot more to come in the next 2 months. But that was the point of that raise. And that gave us money to do all those studies, plus enough runway to sort of mid 2026. But what happened after that is interest in the company really went up, and we had strong demand, investors and funds. These are funds, institutional, saying they want to buy into the stock. And so we ended up doing a second raise. We weren't even really looking for money, but we said, hey, there's such strong demand, we may as well take advantage of this. And we ended up raising another 8.7 million Canadian dollars back in July. And what that's done is given us a much longer runway. On our G&A, we're now having a runway into mid 2027. There's a bunch of money now to start the pre-feasibility study, some of the long lead, metallurgical testing, which we're about to start. And also just more sort of, let's call it unallocated cash, just cash ready to put in the ground to advance this project. It gives us flexibility. So we've now got great flexibility. We've got a great stable platform with our runway all covered into mid 2027.
Okay. Next question here. What do you think is holding down the share price?
I'll take that one too. I think what we've seen is, I just talked about the equity raises. Take a look at the structure of those. Those were units, private placements. It had a share component, one common share, and it had a warrant component. And, there's known participants in the capital markets that, like to buy into this type of unit, and then they try to, essentially sell the share in order to capture that warrant. And if any listeners aren't familiar with warrants, it's similar to like a call option. It's kind of a derivative, similar to a derivative call option that gives holders the right to buy a share at a point in the future before expiry for a certain price. Now, given that we're a junior company, there is not an active derivative market for our shares. So really, this type of placement is the only way for those types of institutions to gain access to this type of warrant or sort of derivative. So I think what we've been seeing is a lot of these institutions that bought these units selling the stock and keeping the warrant. And I think that's a big part of it. Another one that I've touched on a couple times, because I think it's important for transparency on this with investors, is that 13.75 million in debt. If you look at our Q2 financial statements, right, you'll see that debt comes due in June of 2026, and we have a going concern note in there too. And so if I was an investor today, that would be something I'd be looking at and watching. But the reason that I don't feel so bad about that is our strong plan to eliminate or to materially reduce and refinance that debt by the end of this year. So I think once we're able to achieve that, once we get to the point where we've now paid down that debt or fully paid it off, but at a minimum paid it down and refinanced the remainder to 2029, the details of which is in a news release that we put out earlier this year, I think that will now have removed that overhang completely, and we'll be able to move forward. And the third one that I think is a valid one is the President Trump and the tariffs. Take a look at what happened with the tariffs. He talked about a copper tariff earlier this year. And, as a result, the COMEX copper price shot up dramatically, very dramatically, to all-time highs, touching $6 a pound. And that was just based on rumor, just essentially something he said off the cuff. And for a couple of months, that caused a lot of volatility in the market. And, you know, a big investor that I follow on YouTube, you know, he talked about it, he called it noise. And I agree with him. I think it was noise because the long-term fundamentals for copper are very strong, and especially copper made in the United States. So when Trump essentially said, nope, there's no tariff on copper at all, and it went to zero, and we saw the biggest one-day drop in history of copper that day, a 25% drop, you know, I could see how that may have caused some investors who may have just been playing that tariff to have exited their investments over that loss of that tariff. So I think those are the factors in my mind. Now, I think that we're essentially through now. Like if you look at our great strong volume, you know, we've traded something like 35 million shares in the last couple of months, an incredible increase over before we pivoted to the open pit. So I think from the factor of, you know, people selling the stock to keep the warrant, I think we're through that or almost through that. I think in the debt, we know when the plan is to get rid of that. It's by the end of this year. And I think with the tariff, I think that's got to be through now. So I think we're going to see the end of this very soon, this overhang. And I think that we're going to see great results when we put out our next HVA high value add news releases.
Okay, thanks for that. Next question here. If a partner were to provide full financial backing, what would be the earliest timeline to bring the Gunnison project into operation?
So we in our, you know, I went through the Gunnison timeline and, you know, I'll stand by that timeline. I think if we brought in a strategic partner, you know, I'm not going to tell you that it's going to accelerate beyond that timeline. I think that's a reasonable timeline. Like we've got our pre-feasibility study, we've got our feasibility study, we've got detail engineering. You know, you may listen to other companies telling you they're going to build the mine on a pre-feasibility study, or the, you know, these studies are going to take a lot less time than they really do. I think that's a reasonable timeline. I think there's only one case where we could greatly accelerate that timeline, and that's if the government came to us and said, we need you to produce copper as fast as possible for national security, okay? If the government came to us with sort of a open checkbook with like a bottomless sort of checkbook here or a bag of money and said like, they don't care if there's cost overruns, they don't care if there's things that need to change that cost more money, it's just we need copper as soon as possible because of some global conflict that may be started. I think in that event that we could definitely accelerate this by maybe 1 to 2 years. I mean, you have seen actually companies that constructed a major mine off of a PFS. It's happened. Okay, we don't recommend it, but it's something that's happened. And if the government was to say, make that happen, then I think we could.
Okay. Are you considering changing your main listing from Canada to the US?
Yeah, I hate to take all these questions. I'll just take that one too. Is, you know, we're looking at a New York Stock Exchange listing. It's something that we're investigating. We think it would make a lot of sense for a company like us because of our Made in America story and the strong push across the country to make more in America. We're seeing people coming together of all parties and walks of life, you know, to make more here. That's what everyone wants to do. And copper is a raw material that goes into virtually everything. So as Gunnison Copper, as we're well positioned to take advantage of that, I think that listing on the New York Exchange could potentially offer a very strong pathway to the U.S. retail investor market, potentially greatly increasing our liquidity and volumes. But at this time, it's just something that we're looking at.
Okay. Have you given any thought to spinning off Strong and Harris so that funding can be obtained to give value to Gunnison?
I'll take this one, Craig. Look, we have looked at that in the past, you know, and I think that you know there's something to be said for that. The thing with Strong and Harris is the exploration hasn't really been completed there. I mean, there's an adjacent magnetic anomaly that hasn't been tested. There's an adjacent IP induced polarization anomaly right next to the current resource that has not been tested. And it would be, you know, in our view, a little embarrassing if we did a transaction on a project that's about 1 kilometer from our operating mine only to find that it turns out to be a much, much, much larger resource. So that's what prevents us from doing, spinning that out at this point. We did mention that Rio Tinto is looking at our exploration assets, and I think it's really important that we keep the package together so that until they finish their investigation. So we're not looking to do that anytime soon. One of the things we are doing is we're investigating whether Strong and Harris would make a nice little starter pit to the Gunnison Project. So there's some work going on in the background there on engineering and mine design and scheduling. It's a higher grade resource. The strip ratio overall is quite high, but there's some shallow material there. And so, one of the paths we're looking at is, could we do a starter pit at Strong and Harris at a smaller scale? And then whilst that start bringing on production from that, we then scale up the larger Gunnison project. That would reduce our initial capital. It would make the project something that we could do ourselves. So we're looking at that as a scenario as well. Ultimately, our preference is to bring in a strategic partner, help us fund the PFS and the feasibility study so we can move the Gunnison project rapidly forward. That's our goal over the next sort of 6 months or so, is to find that strategic partner and bring them in.
Okay, next question here. What are the expected grades to be fed into Nuton's sulfide leaching circuit and recovery?
We haven't disclosed that information. So what I can say is that the Johnson Camp, the sulfide material is typically higher grade than the oxide material. You can look at our website. I think there were some cross sections in that. A lot of the sulfide material was going about 1% copper. The oxide material is going sort of 0.3% copper, some less than that. So it's kind of a mixture. I think it's safe to say that the range of grades going on is going to be in the order of sort of 0.3, in some cases 1%.
All right. Another question regarding the Johnson Camp and Nuton. So following stage 2, does Nuton have a free option to be a 49% JV partner of Johnson Camp, or do they have to pay Gunnison something for that? At a minimum, I would not think Nuton would not get the 49% of the SXEW and pre-existing infrastructure for free.
We would agree with that. But look, the way the agreement is structured is that we would negotiate terms on the 49% and 51%. There are no preset terms, so that's a matter of negotiation when that point comes.
I guess another question on Johnson Camp. At this point, is the revenue split 50-50? And if so, can Gunnison retain its share to support cash flow, or do all proceeds need to be directed toward Rio Tinto?
Any of us could answer that one. Rob, do you want to have a go at that one?
Can do. So yeah, all proceeds are going to repay the investment that Nuton has made in the Johnson Camp restart. So yeah, that's as Craig mentioned, when the stage 2 is complete, ultimately, if that investment hasn't been paid off, then it would zero out, and those funds would then go to Gunnison. And again, if that payment happens prior to the end of stage 2, if copper prices do some significant improving over the next little while, and that investment is paid off, then yes, that all of that profit at that point in time would go to the Gunnison organization.
Okay, in the interest of time, last question here. Your March 31 technical report does not seem to estimate costs to move you forward. Do you have an estimate?
For which technical report are you referring to? Is that Johnson Camp or Gunnison?
It's for Johnson Camp.
That's the Johnson Camp one. No, we haven't disclosed that at this point. We're still working through the construction is not yet complete on the Nuton material. It should be complete soon, and then that'll be ramping up. So there will be additional disclosures that we'll be making on the Johnson Camp asset as we go forward, but we haven't disclosed that yet.
Okay, I think that's it on time. So Stephen, Craig, and Rob, thank you so much for taking time to host this webinar with us today.
Yeah.
Just as a reminder for our audience, our next webinar will feature Jindalee Lithium, and that's tomorrow, September 16th at 9 a.m. Eastern.